we were talking about the USDA loans with 0% down. How does that work? Or maybe you want to do a loan for an income property. So I'd love to hear, Mercedes, what is one kind of outside of the box loan type you really love talking about? All right, hey everybody, I am here today with
Mercedes from Ability Ambeck.
And Mercedes is a wonderful local lender. I've had many wonderful transactions with Mercedes, including on my own home.
Local to where?
Local to
Houston.
And California's Central Valley.
Yes, Central California's Central Valley. Oh my gosh, I'm losing my brain. So I know, and you might even have heard, of an FHA loan or a VA loan, conventional loans. But one of the things I find so important about having a local lender that you can really talk to is there are so many loan types you may have never heard of. Like we were talking about the USDA loans with 0% down. How does that work? Or maybe you want to do a loan for an income property. So I'd love to hear, Mercedes, what is one kind of outside of the box loan type you really love talking about?
The one loan that's really become popular with investors is called the DSCR loan. And that one is specifically for investor loans. And that one, instead of having to use your income taxes and qualifying with all the income, this one is just the debt service of the rental income that qualifies that loan. So you don't have to use all of your income and average out everything to qualify. It's just basically whatever the property is going to rent for divided by your principal, interest, taxes, and insurance. And if there's a certain number that has to calculate with that, and if that passes, then that's what is used to qualify and nothing else.
So with the DSCR loans, is it like a regular investment loan where you have to have at least 20% put down?
It's at least 20%. It does have a credit score requirement, but this is one of the, back in the day when they used to have the stated loans, the no ratio loans, it's kind of similar to that, except this is a secured loan. It's a 30-year fix. You do have the option of doing an interest only, but it is a 30-year loan. So it is out of the box, but still an affordable loan for investment properties.
How often do you see these loans?
They have become so popular. There's been several already in the last few months that because it's just it makes it so much easier for the investors to not so much requirements as far as income qualifying, is just the property itself that qualifies.
Right, because what if you have somebody that only does income properties?
Mm-hmm.
That is their whole income stream.
We do have, the rehabilitation loans. They call it the 203K on an FHA, the Homestyle on a conventional. And that one is basically like a remodel loan, but it's a kind of construction remodel loan that allows a homeowner to upgrade their home without having to go too far into debt. And it's just one loan.
I think it's interesting that there are so many options available to investors or potential investors. I think a lot of people assume that they just have to have cash to purchase an investment property. So that's, how often do you think that's the case, or people are surprised to hear when you speak to them that there are loan opportunities for investment properties?
You know what, it is surprising right now because some people are just stuck on that because of the issue we had back in 08, 09, the issues we had. So now people are kind of, fearful of that kind of financing when you're trying to get creative, because back years ago, they used to have what they used to call a 80-10-10, which was to avoid PMI. You would do an 80% first, 10% down, 10% seller credit or seller second, and you're still avoiding the PMI. So you could do that owner occupied or investment property, and it'll help you purchase that home. So now with people that have been around the several years, when they remember that kind of financing, when you talk about creative financing, they kind of just like stand back and say, oh no, those are ugly loans, those are ugly loans. No, those ugly loans are no longer around. Now you basically do qualify for everything, but you do have creative alternatives because there is so many options of financing. You have the construction loans, you have the HELOC loans, you have the rehabilitation loans. So, and you do have the option of doing an interest-only payment for 10 years, but it is a 30-year loan.
That's just another example of why it's so important to speak to a lender, even as an investor, because you never know what sort of programs are out there or what options are available to you that it might actually help you in the long run.
Talking to a lender, sitting down with the lender, looking at overall of what your plan is, because some investors, they want to flip a property, so they only want to keep the property, less than 12 months, or some just want to convert them into rentals. But if you're looking at a short term, usually it's not as common, but there is short-term financing, private financing, just to be able to remodel the property and put it back on the market.
I'd like to go back to something that you said before, for our listeners that might be new to, lending and new to some of the terms. What is PMI?
PMI is private mortgage insurance. A lender, when you're buying a primary residence and you put less than 20% down, the banks require that you have private mortgage insurance added to the loan.
And is it a percentage of the loan amount?
It's a percentage of the loan amount, depending on credit score and how much money had the down payment, 5%, 10%, 15%.
Right.
So it's a percentage, but that is strongly based on credit score.
And the good thing about PMI is it does roll off. It doesn't stay with you forever.
Once you get your principal to 80% of your value, minimum requirements is that you have 2 years of payments with no late payments.
Oh.
And if property values increase, you can always call the lender, the servicer, and ask if you can have it removed. So normally they will send you a list of appraisers, or they'll ask you to send an appraisal report and they'll review it.
Do you mind just touching quickly on what a HELOC is?
A HELOC is a home equity line of credit. So that one is usually, they allows you, if you have equity built into your property, which a lot of homeowners right now do, is there's equity in the properties and you just need something, a small amount to maybe do the windows, maybe do a new roof, or pay off some debt, consolidate some debt. You can, usually on a HELOC, you can go up to 90% of the value of your property to be able to pull that cash out and do whatever, home remodelings or debt consolidation.
Are there penalties? You have to pay it back in a certain time? How does that work?
Usually on a HELOC, it gives you the option of 10 years interest only also. So you have a minimum payment, at least just to help you out budget-wise, but you can pay it as short a period of time. You can pay it off anytime. Usually your HELOCs or your 30-year fixed loans will never have a prepayment penalty. Once you get into the out-of-the-box loans, those you can always have the option to add a prepayment to save a little bit on the rate.
This has been fascinating. I think so many of us, we just tunnel vision to, our primary residence loan, good credit FHA. I love hearing some of these other programs.
There's a lot of options out there.
Awesome. Well, thank you, Mercedes.
Thank you.
Go get a loan.
Let's do it.
All right.
Bye.
Bye.